Hey Resource Hunters, this is Matt Insley with Daily Resource Hunter, here boots on the ground in London at the Platts 6th Annual Oil Conference. There's a lot of stuff going on here, and I wanted to step away from the conference and get you a couple tidbits, takeaways here. One thing that you might have noticed from last week, I sent out an oil review, and basically I'm thinking that the oil market is due for a pullback. Earlier today and the conference yesterday, I've noticed that there is some momentum building, and I think a lot of people are sort of following that line of thought. Reasoning is simple. You've got tons of U.S. production coming online from shale plays, and that is just a simple, more drillers are drilling, more oil's coming up the well, and with $90, $100 oil, they're not going to stop drilling. So that's been continuing. The other thing that's happening is OPEC is they're cutting back on their production a little bit, but their spare capacity is rising. So you've got this situation where OPEC has a ton of oil, the U.S. has a ton of oil, and the global economy hasn't really picked up to the extent that it would need to demand all this oil. So going forward in the short term, and something that I found at this conference is, it seems like the necessary OPEC being a necessary player in the U.S. oil market isn't really there. They're not going to be we're not going to be depending on them like we used to be. So they're going to have to put their crude out into the global crude market. And the way that I see it is that there's just not enough demand for that. So they're going to either keep it in spare capacity where they're not getting any money for it, or they're going to flood the market a little bit to get more product out there to make a little bit more money for their coffers. The way I see it, either way, we're most likely going to have a pullback in oil. Like I said a week ago, it looks like the efficient price for oil in the U.S. would be $80. But if there's any sort of big pullback, it can get a little volatile. We could see oil head down lower than that. After time, it would pick back up. But I'm looking for $80. And like I said, everything here at the conference has sort of swung that way for me. Another person here is Byron King, and I want to give you his take on it as well. So Byron, I will introduce you. His boots are on the ground in London as well.
Hi Matt, thank you. Yes, my boots are on the ground here in London. Everything that Matt told you is correct. That is what the conference is bringing out. There are a couple other very, very important points that we're seeing. We are seeing dramatic changes in the flow of world oil. Essentially, North America is isolating itself from much of the traditional import market that we have seen. Entire regions in Latin America, South America, West Africa have essentially stopped or dramatically scaled back on what they export to the United States. We are producing more and consuming more internally in the U.S. But that other oil doesn't just stay in the well, doesn't just go away and disappear. No, that other oil is now flowing east to India, to China, to the Koreas, to Japan. And so we are seeing dramatic geopolitical shifts in terms of trade patterns. And this also affects the entire trading system. The people who buy and sell and make markets for these things, who bring product from where it is in a surplus to where it is in a deficit. And the signal for moving these things is price differentials. They trade the difference. They make a market between a high price and a low price, between scarcity and abundance. And so we are seeing dramatic changes that will affect so many things in terms of the sourcing of oil, the refining of oil, the availability of product, and all of this has to do with the fundamental price. The shale revolution in the United States is truly a global revolution, even though most of the drilling is happening just in a few states, and in a few basins in the U.S. It really hasn't spread out to the rest of the world. If you want to look at the medium and the long term, over the next 10 years, 20 years, certainly 50 years, yes, we are looking at a major change in how things happen in the energy markets of the world. So thanks very much for subscribing to Daily Resource Hunter. We appreciate your efforts.
Thanks.